Welcome to the REI Freedom Podcast, where we unleash the power of real estate investing and empower you to create a life of freedom on your own terms. At REI Freedom, we provide high-level acquisition skills training and coaching to take your real estate game to the next level. Say goodbye to deal cancellations and hello to consistent success. Join us on the REI Freedom Podcast and unlock your potential and claim your freedom in real estate investing. Welcome to the REI Freedom Podcast, where real investors get real results. Each week, Jeremy Beland shares the sales strategies and acquisition systems behind 500 off-market deals and over $12 million in profits. Today's guest is Michael Cossette, a seasoned RE/MAX broker and creative dealmaker out of Central Texas. In 2022, Michael closed a 12-unit apartment deal using a mortgage wrap with seller financing, leveraged a cost seg strategy to reduce taxes, and in 2023, refinanced that same wrap with private money, a true masterclass in stacking creative tools. Now, in 2025, he's working on refinancing the seller balloon with a bank or private lender. Michael owns everything from multifamily to commercial, even a private island, and credits his success to fast learning, adaptability, and grit. This episode is sponsored by our free guide, More Deals, Bigger Deals, and Less Cancellations. Grab your copy at reifreedom.com/gift. Let's dive in.
Hey everybody, welcome back to another weekly episode here at the REI Freedom Podcast. Thank you so much for listening. We have another great guest this week, and I am your host, Jeremy Beland, and I'm excited to introduce him and share a little bit about his story and his journey. He is a 20-year investor. So, somebody who's been in this investing world only half that time and seeing how much I've experienced, overcome, and accomplished, and how many mistakes I've made, I can only imagine the wisdom and experience that this gentleman is going to be able to share with us today. So I'm super excited about that. His name is Michael Cossette, and he is from Central Texas. And let's just get started. Hey, Michael, how you doing today?
Fantastic, Jeremy. Thank you for having me on. I got to say, I love what you're doing with the industry. All the off-market stuff is just pure gold. And I know your listeners really appreciate that. And I love it too.
Well, I appreciate that, Michael. That's really kind. Thank you so much. So I know you're out in Central Texas. You've been in this business for 20 years. I also know that you have 4 kids under the age of 6. God bless you. I have 5 kids. I can't imagine if they were all under the age of 6. Tell us a little bit about your journey and story into real estate. We'd love to hear it.
Sure. My journey started back when I was finishing up college and had an opportunity. My folks were leaving the state. I needed a home base and figured that I was in a fraternity as well, and they needed a fraternity house. So I kind of put 2 opportunities together, went property searching, was able to convince my folks out of the state to be investors in that. And I would just run the property, collect rent, keep it rented out, pay the mortgages. And that's kind of how I got into the investing world and the real estate sales world, because I was a 22-year-old kid at the time. And actually I was 20, because I was 20 years old when that happened, and I was treated like dirt. And so I could see, like, off the bat that, the service I was given was just subpar, and I thought I could do better. And then, of course, having a property that you can rent out and pay the bills and literally destroy the property with a fraternity over the course of 4 or 5 years, 5 people living in a 4-bedroom house with upstairs rented out, and then go to the bank and they just say, "Oh yeah, you want more money? We'll just give you more money." Well, no, you don't get it. I destroyed the property, and then no, you got plenty of equity. Here's more money. I'm like, oh, halfway. What is going on here? So that was the light bulb moment that got me into the investing space, and then the sales side, and then from there on, it's been chug and churn until we had a bunch of kids, and then we had to step up the volume.
But you're also a broker, so you obviously started out as an agent and then moved into the brokerage side of things. I mean, you got residential and commercial real estate, multifamily properties that you own. You even own a private island, which we're going to talk about in a second, which is pretty cool in Florida. And you even have some short-term rentals. So you're kind of doing a little of everything. What is your business model, I guess, first and foremost?
So for the investment side of things, the model is basically just looking at every opportunity. We're on the agency side as well. So, back when the last market crash in 07, 08, 09 timeframe, there were a lot of desperate sellers and stuff like that. And every property we come across, we try to look at all the different angles. And anyone who we know, we're always letting people know building relationships and just letting them know, hey, we're always looking for investors. We're looking for properties for ourselves, and we have investors. So anytime we can make any kind of connection, we're always listening and just trying to run the numbers and see what might work for who, and then using our network. So, and that's the fun part. Like, that's the real estate sales side is kind of the bread and butter. It's shrinking, and then the investment side is the growing side. That's, kind of funding the fun side of things of acquiring the properties. Like, that's not work for me. That's not work for us. We, I love it. Yeah, love it. That's why I
relate to that.
Yeah. You always like opening up those contracts. It feels great.
Yeah, it's a great time. So you graduated college. I mean, you went to college for one thing, but you basically just came out and just started working in real estate, right? Or have you ever had a full-time job? Or you've been a full-time real estate person your whole life?
Yeah, I mean, outside of college, I worked at a call center for about 3 months, and quickly realized that being under somebody else's thumb was not who I was meant to be. I had to go through the grind and be self-motivated and feel the rewards that I build myself. And so I figured that out pretty early out of a call center. And we dovetailed into the height of the 05, 06 market. And so things were flying, and it was just like, hey, opportunities right here. I just made a ton of money off flipping that first frat house and paid for my college, and had a 6 figures left over to start to kind of get into the franchise and get a Remax franchise, and start with my pops, and he quit his job and we started franchise together. So yeah, I mean, that's kind of what.
That's amazing. And you're in Central Texas, as I mentioned earlier, and Texas has seen quite the real estate boom, especially in the last 10 years since the Great Recession. And you've been around for that. I mean, the fact that you were even in this field before the recession. So you saw what it was like before, saw it tank, and then got to be there when all the opportunity, was around in, 2011, 12, 13, 14, before it really started taking off again. So you've seen a lot. And how has that experience been for you?
I think watching the opportunities come and go in the present never really feels like an opportunity. There's always going to be restrictions, right? Prices are high, and there's multiple offers and rates are dirt low. Well, the opportunity is in the rate, right? And then all of a sudden it flips. You have negotiation power, but you've got high rates. And so, looking back, you always see the opportunity that you did or didn't take advantage of. But when you're in the present, 90% of the people they focus on the restrictive nature of things, and they don't let the market come to them and figure out where is the bubble of your unique advantages, that property, that seller, the market, and it's always changing with everyone. Somebody's got no kids who's floating around, traveling nurses, way different opportunities, and sees the market way differently than, a father with 4 young kids who runs multiple businesses. I'm looking at a whole different set of dynamics. So it's the same market and there's same properties, but there's many that fit perfectly for me that would not fit for that other person. So I think building the opportunity for yourself and not pigeonholing yourself into, a certain scenario, I think that's key, and in taking advantage of those opportunities. And like 08, 7, 8, 9, a lot of that was the foreclosure short sale market. My very first property that I bought by myself was a foreclosure, and off market, on market, resold, foreclosure, chased it for like a year. And that property now is a 12 unit apartment complex.
Wow.
Yeah. So that would be opportunity then.
Yeah. Oh, I really like your view towards things and insight. I agree with you. It's just a different way to look at it. There's opportunity in every market, depending on who you are, right? It may not be for the average retail buyer, but for investors, I personally feel there's really never a bad time to get into real estate, because there's always going to be challenges or restrictive situations, right? When the rates were low, well, then sellers felt like the house was worth 10 times more than it was. Now that the rates are high, people are afraid to buy because they feel like you can't do anything. So you can't have it both ways, right? You have to find a way to get in, because it's never going to be this little perfect scenario where you're going to be able to get dirt cheap properties with no restrictions and everything's going to work out, perfect, like a little unicorn. But,
April
but
of 2020, that was that window. That was the
window,
perfect
yeah,
unicorn.
exactly. And, and people are still upset today because, the rates are much higher. And then since then, there's been different challenges. But with that being said, my experience, before 2020, the market was kind of steady, but it was slowly up and to the right. And then also 2020 went way up into the right, at least up here in the Northeast. And then, it's been coming crashing down, but we've been up and down with this, the last 5 years. We've been able to still successfully be investors, wholesale, flip, and everything through all the different changes. And there's a lot of people who are still sitting on the sidelines waiting for a great opportunity, but it's already passing them by every day, right? There's no bad time to get in. It's always a good time. You just have to come in and just get some guidance and start working at it.
Yep. That's like the old adage goes. It's not about timing the market. It's about time in the market.
Right. Which you have plenty of. All right. Well, I want to get into this 12 unit that you just mentioned, but before we do that, I'd love to know, how are you going about getting properties in your market? What is your approach to do that? Are you doing any marketing? Do you have a team that does it? Are you just have an online presence, a branding presence? How do you get opportunities for you and your business?
So a lot of the opportunities that we're getting is we do have, a online social media presence. Not a very big one, but our followers know who we are. I mean, years and years and years, they know we're in the business, old clients, friends, their clients. So they know we're investors. They know we're always looking at properties. So anytime, something comes up that, somebody needs help with or something like that, we'll get a reach out. And so that is probably the primary way that we're acquiring properties. And we're not aggressively acquiring them. I'm not out banging doors just trying to get properties. When the deal comes to me, if it fits, the diff checks all the boxes, then yeah, we'll take a big swing at it for sure. I don't have to really have right now. I've got the different businesses. I asset manage a bunch of stuff with all 4 kids. I'm a broker. I coach baseball, all of those things. I don't have the time. So my goals now are, kind of the delegation, hiring, replacing time, buying my time back. And so those types of activities, yeah, we have the pay per lead, pay per click stuff that we, we'll activate here and there, especially if there's a good time in the market. Like we'll get a 1031 that we're, doing. And then all of a sudden, okay, now you have 180 days to buy a property. Okay, now we got to turn it up and find the property. So we have those capabilities and those levers that we can pull. But for the most part, when we find an asset and we're like, hey, let's investigate this asset class and how it might fit, then we take our time. We're not jumping the gun because, we really don't have to. And this is a long-term game. I tell people, and I always try to do this myself whenever I have a question or, a conflict, is not to think about property of, okay, what should I do now? Is think of it in terms of decades, not years, decades.
Yeah, I like that.
In true decades, what is the decision that I'm going to look at that I'm making today? What am I going to be thankful that I did 2 decades from now? Or is this a decade property or 2-decade property or a half-decade property? Sure. Nothing less than a half decade. I'm not interested, And so, a lot of these, 2-3 decade long properties, that's where we're like, hey, we're not trying to make a fast go run at it. Like this is a 30
long-term wealth play.
Exactly. And maybe even longer, my kids will be able to leverage this. So
yeah, I love that. All right. So let's talk about this 12 unit building that you talked about a little bit earlier. Sounds like you have a unique way of getting the property and you've done a few things to it. So why don't you tell us the story and journey of this 12 unit apartment building that it looks like you used a mortgage wrap with seller financing to originally get it?
Yeah, that was the mortgage wrap, seller financing, and the down leg was the sale of my very first home property. So that was kind of the down payment, the equity in that property. And what we saw was kind of when we looked at it was 2020, end of 2020. Well, I guess it was the end of 2021, and started looking at things were moving fast. Obviously rates were still low and things were moving quickly. And I started examining some of what the return on equity that we had in our investments, right? Because a lot of them have, great, return on income or return on, but the return on equity that builds up over time is something that a lot of people don't really look at.
I agree.
And so when I started looking at how much equity we had in these small single family homes, then the amount of time that we're having to spend on, some of these assets. And, that return on equity didn't really make a whole lot of sense. And the market we saw was flying. And so that's when we decided, okay, let's see if we can get a better return on equity, scale up the asset, and get into an asset class that has a high growth potential, especially in Central Texas in the markets that we were looking at. And so that was the decision to make. So when we sold that house, we were able to pull good equity out of it. The rates started rising. So I think we sold it at the beginning of April, May of 2022. So rates were going up.
Sure.
And we had a kind of a gentleman's agreement it was an off-market apartment complex through one of our agent's sisters was an investor in. And so that's how we just put feelers out. And we're like, hey, if anyone has a 8 to 20 unit multifamily with little value add component, that's what we're looking for. And then the opportunity presented itself. And the challenge with that one was, at the time when we sold the first property, we were, let them know complete transparency. Well, the rates started rising. And so the banks started pulling out. Right.
Sure.
So rate went from like 4 to 4.5 to 5 to 5.25. Right. And so the deal wasn't making sense anymore for traditional lending while we were under contract.
Wow.
And so then we decided that we went to the sellers and asked them, okay, you guys have a locked in 4% rate. Can we take advantage of that for a short period of time? And then you guys can take back a second, and then we will put up the down payment. And they agreed to that. And so we had about a year to do that because it's commercial property. So the due on sale clause is, if the bank is borrowing, the bank is lending you money at a 4% rate, and now rates are at 6.5%.
Sure.
They're looking at their notes and they're like, man, and we have to, with commercial property, you have to submit tax returns every quarter. You have to submit rent rolls. You have to submit all these things to the bank. So we knew the clock was ticking. We had about a year before the current owners had to submit their tax returns, and we had to submit ours. They would see income. Red flags were going to go off.
Sure.
And the bank was going to be like, hey, we can take this property due on sale and relend all this money at 6%. Right. And they were going through the files. They had, they got files. There's like, boom, every commercial property, you got a 4%, call and just dive into it and make sure. And so when that happened, we had to restructure it again with private money. So we restructured it with some of our valuable clients that also, wanted to be investors. So we were able to get private money, and now we're restructuring it again as we're buying out the seller financing side this year. And so and the original game plan, as we know, multifamily kind of took a little bit of a hit as well with all of that. So as we moved forward, again, rents kind of went down, insurance costs went way up, taxes were going. And so again, the banks were like, no, this isn't going to make complete sense unless you guys do a capital call or bring in more cash to the table. So now we're restructuring again. And the original plan was a 3-year not flip, but value add play.
Sure.
And now we're looking at a 5-year or a long-term hold.
Okay. All right. So let me just make sure I follow all this, and I'm going to try to simplify it a little bit.
Please do.
So you got this opportunity off market, and, it was at a time when the interest rates were starting to spike. So while you had it under contract, the numbers just didn't make sense to buy it with, 20% down or whatever and get a commercial loan for the rest of it, at probably a 5-year fixed rate, 25%, 25-year amortization, your typical commercial real estate loan. So you say to them, hey, listen, let's piggyback off your loan, keep it in place, at least for a year, so we can add some value to the property, stabilize it, so we can build more equity to refinance it out. That'll kind of put you in a stronger position. So they agreed to do that. They took a second position. And then you put in probably like $100,000 down payment. So here's $100,000 to the seller towards the purchase of the property. We're going to pay your mortgage payment, and we're going to pay you guys a second mortgage every month, and whatever's left, you guys get to keep. So probably not cash flowing great at that time, but you're starting to add some value to the property, knowing that the bank's going to say, hey, there's a lot of stuff going on here, and we're not very comfortable with it, and we feel like we can get more money for it. And I know with some of my banks that I was using, they're not even lending anymore after the interest rates. They got out of the lending game altogether. So you're in a situation where you have to now bring in private investors. And did you buy out the current mortgage? Is that what you did with the seller? So you bought them out with private lending cash?
Yes, we bought the original bank loan that the sellers had, which was about $1 million, something like right around $1 million. And we bought that out with the private money. And then we had another 2 years, 2022. So 3 years on the seller financing side.
Okay. All right. So you still have a note with them.
Yeah. So we have, mind you, this whole time, economists everywhere are telling us, "Oh, rates are coming down. Rates are coming down."
Yeah, sure. Yeah.
And they're just steadily going up. So every year, we're like, "Oh, we bought another year. Next year, 2025 is going to be great. We're going to be back in the fives." And here we are.
It's tough. A lot of people were scared, and a lot of people, prior to the interest rates going up, and obviously they more than doubled in a lot of cases, when that 5-year fix was coming up and you were going to go to a variable rate and you wanted to refinance at that time, there was no way to make the numbers work anymore, right? Especially with the syndicators, right? You're buying these big multifamilies with this 5-year plan to come in, stabilize it, refinance it, either, have equity in it or sell the property. And a lot of people lost a lot of money on that during that time, or lost everything. But what I love about this was you were very creative, and you're like, all right, we got a lot of challenges, a lot of problems here. This is a lot of stuff where scares people in real estate, but you're finding these creative solutions using other people's money as much as possible. You got the sellers, private investors, you got, the mortgage company, you're using all of it to make it happen. And you still have an end game here, end play here, which you're going to try to refinance out of this. And you'll probably have enough equity in at that point, pay off the note to the sellers for the seller financing, and you'll finally stabilize the property, be in a commercial loan with it. And then the dust will settle, but it's going to take you quite a few years to achieve that. But at the end, you're going to have a high performing 12-unit building with affordable housing in Central Texas, which is probably only going to double in value over the next 10 years.
Absolutely. And and you nailed it on the spot. Like, a lot of people are having these kind of challenges. And I think one of the key differences, you have to like doing it, right? You have to enjoy that aspect of it. Like, it's a challenge, and life in general is it's a challenge. It's you choose the heart, right? And when you're working to solve big problems, people compensate you well, and that sort of thing. And learning the capital stack market is, the buildings and the way the capital markets work. If anyone young is out there and they're in college and thinking about getting into real estate, I would highly advise leaning into understanding the financial markets and the capital stack, the way that those dynamics work, especially if you're good at math and coming out of college and still in that study learning mode. Because when you can get the, all the macroeconomics of borrowing and leveraging money on the real estate side, a lot of people don't really understand that, and they are scared of it. So people will pay big money just to have your knowledge and the connections there. And I think that's fun too. If you really enjoy it, then the next problem that comes might seem big, but it also looks like a big juicy hamburger.
Yeah. Hey, bigger problems you can solve, the more money you make, right? That's just pretty much how business works. All right, we're gonna wrap this up, but I do have a few more questions I want to ask you. First off is, you have a private island in Florida. Like, how the heck does a guy from Central Texas have a private island in Florida? And what are you doing with this private island? Tell us all about it.
Yeah, absolutely. This thing happened in COVID. Everything was shut down. It was April. I had a buddy come stay at my Airbnb, and we were chatting, and I was telling him how we could, there's a thing called Hip Camp out there, and you could literally rent out raw land to campers, and then leverage that and build little units, and then, then get banks involved and leverage against your, proof of concept and what you're building out there, and then just continue to leverage. So all you really needed was a piece of land to start with, right? Yeah. And then still the case, a little harder now. But so I told my buddy that light bulbs went off. The next day he came over, he said, "I found the island. I want to buy it." Like, awesome. Well, I've never bought. Are you crazy? What's going to happen? I'm like, what's the worst thing that could happen? Like, the island gets washed away. I don't know. But he asked me, "Hey, will you help me buy it?" I said, "Yeah, I'll help you buy it." We dove into it, learned so much about environmental protection and the aquatics departments and how many different entities are involved when it comes to ocean utilization and islands. And so he asked me, "Hey, we had to end up buying cash because banks weren't interested in lending money on a piece
And
of
an
land.
island in Florida.
Yeah, vacant island. Yeah, exactly.
Yeah.
So yeah, he asked me to come in. I said, okay, I'll jump in as partner with you. And then I brought in another partner that lives in Florida because I lived in Texas and I didn't know, I didn't want to be that far away and like have containers full of people and money washing up on shore and get the DA at my door. Yeah, I got kids now. I can't be happy with that. So yeah, we picked up the island and then figured out how logistically difficult things would be to develop it. So that's the plan, is still, the development side, but it was a very inexpensive purchase of time because it was a desperate seller in a weird time in the world. And so we got a great deal on it. We had a ton of equity in it very quickly because of that COVID, experience. The value of islands and raw land just went through the roof.
Yeah, sure did.
So that was great. Now we're working on developing it, turning into, multiple campsites with solar, rainwater collection. We're still trying to figure out the septic situation because, you can't really put a septic tank on an island. And, but that, having fun out the island with the family, taking boats out there, having guys trips out there, kayaking and stuff like that. The value is without the development. I mean, it's just, the intrinsic value of enjoying your own private island whenever you want. It's just amazing. So even if and expensing trips down to Florida with my family. So
yeah, there you go. There you go. Yeah,
development.
Kids are going to Disney World and it's all expense and it's a tax write-off.
Exactly.
So that's awesome. I love it. That's what we do in our house too. I love how diverse your real estate is. Like you're just doing a little of everything and you're obviously very intelligent and you're going into everything and trying to learn it as you go, but you're not this analysis paralysis type. Like I'm not going to do everything until I figure out everything about an island. You're like, all right, cool. Let's buy an island. We'll figure it out as we go and take a massive perfect action, right? The 12 units, another scenario that a lot of people would have been like afraid to do anything, but you just went in, figured out a way to get through it. And I feel like that is a strength that a lot of people overlook in real estate. You have to have a lot of massive imperfect action and you're going to figure it out along the way. You're going to make mistakes. You're going to lose some money, but real estate's pretty forgiving. And unless you, bet everything on black, for the most part, you're going to make some mistakes, but it's going to reward you more than it's ever going to hurt you on the back end, as long as you're just continue to push forward.
Absolutely. Absolutely. I think the biggest thing is the analysis paralysis that we run into dealing with investors is they want to have everything perfect. They want all the spreadsheets to work. And at the end of the day, being in this game that's so long that no matter how perfect you think you have it, like you get punched in the mouth, your plan changes, right? And so I've seen people just build out massive business plans, work years and years, and finally find the perfect thing and try to pull the trigger, and then things go sideways, and nothing they spent the last 2 years doing it has any impact at all. So I'm always I'm going to cross that bridge when it comes, type of thing, trying to obviously look ahead at the future scenarios and stuff, but not let anything kind of restrict me or stop me from going after it. Because at the end of the day, like life is short. I don't know if you have that, but I traveled all over the world and after I got married, I went on a crazy river trip down the Zambezi River in Africa, and the crocodiles and hippos and stuff, and the raft flipped and we were trapped under the raft under these class 5 and 6 rapids. And at that point, we quickly realized like this is the last day of my life. Wow. And then when that's not happening and you're like, wow. And it really brings to light, like, what am I doing here? Like,
yeah.
I want to have kids. I want my kids to be like, hey, my dad went for it. Like, he wrecked for it. I might fail. And I do fail a lot of times. And when I do, it's no big deal. Looking back, it's a great lesson. So I think that's one of the things, is failing fast. It keeps you learning lessons quicker. So I think the more action you take, the faster you fail, the more you learn, the more you earn. It's all a cyclical formula, but you just have to keep moving forward as quickly as possible.
And I love that. And listen, that is somebody who's been in this business for 20 years, right? He's not letting analysis paralysis prevent him from achieving goals. So, if you're waiting for the perfect plan and waiting for the perfect opportunity, well, people like Michael are just seizing the opportunity and just figuring it out as they go. And now he's been a successful real estate investor for 20 years. And you're still waiting to become one. So just keep that in mind. Now, Michael, as we wrap up the show here, we call the show REI Freedom. Freedom in real estate through real estate investing looks different for a lot of different people, right? It could be freedom of time. It could be just building massive amounts of financial wealth or anything. I'd love to know, what does REI Freedom mean to Michael Cossette?
For me, I think freedom of time is the beginning, right? But at the end of the day, what am I going to do with time? It's the energy, right? It's the freedom of energy. I want to be able to not only do what I want, but spend the energy doing what I love, right? Well, no matter what, I know there's no retirement in this business. I already do what I love. Yeah. And so I think for freedom, you have to buy back your time. And then once you have the time, you can choose what you want to do that not only makes you money, but really lights you up. And if you can spend all day, every day at the highest level of thing that lights you up, excites you, and brings you a high, value of money at the same time with a low energy expense, that is the key. And so that's where, it's a never ending journey. You end up like Richard Branson, and he's still at the top of the game, and Tony Robbins, they're still trying to leverage to the next level. And so it's a never ending ladder. So if you think that there's a goal you're going to hit and all of a sudden things are being great, no, the goalpost keeps moving, guys. And you have to, the reward, the goal is not the goal. The journey, the path to get there, that is the true goal. That's the true reward, right? Yeah. You have to learn to enjoy the day to day because that is the reward you're giving yourself. Right? Yeah. That's what you're fighting for at the end of the day. When you look back, that's the most exciting time of your life.
I love that. Really well said. Yeah, the journey, not the result. And that's why for somebody, again, I've only been in this business half your time, and that we're all led to believe early on that we can all just buy rental properties and retire into the sunset. I've yet to meet anybody who has actually done that in real estate. I don't care if they've been in for 10, 20, 30, 40 years. Their goalpost is still moving. They're still working. It is a lifelong endeavor. There is no, I'm going to just buy a bunch of rentals in 5 years and then buy my own island in Florida. You'll never see me again. That just doesn't happen. So
nobody actually wants that. Maybe for a week.
Yeah, exactly. You'd be bored out of your mind. All right, Michael. So listen, I know you're a rock and roll star out in Central Texas. You're looking to connect with buyers. You're looking to connect with sellers. Obviously, you're looking for other private investors. You got a lot of great opportunities to work with. You're a 20-year seasoned veteran in real estate, and you have a ton of experience and a ton of value you can bring others. They'd be crazy not to try to find a way to work with you on some level. How would they go about finding you and connecting with you?
You can find me across all the face space and social TikToks at Ask Mike Coss. AskMikeCoss, and then the @ in front of that, Ask Mike Coss. Type that in, you'll find me. Message me, email me, and shoot me a text. I'll answer it all.
I love that. We'll put that all in the show notes. Well, Michael, thank you so much for being a guest. A ton of value that you brought. We're incredibly grateful for that. So
absolutely, Jeremy. And thanks again for what you do for the industry and helping all the people getting started and really changing their lives.
I appreciate that. My pleasure, my friend. All right, guys, what a great episode. I mean, Michael has a ton of value, ton of experience, a lot to pull out of there. The biggest takeaways, guys, is, diversity, with your real estate investments will be the key to long-term success. Don't be thinking, short-term, think 10 years, 20 years, even longer, right? This is a journey. This is not a destination, and analysis paralysis kills more dreams in real estate than anything else. So just take massive imperfect action, be smart. You'll figure it out. And, just go get it. So I'll see you guys next week. Thank you for listening. And remember, you too could build a life of freedom through real estate investing. You just got to go get it. See you guys next week. Bye-bye.
Join us on our journey to achieve ultimate freedom through real estate investing. We understand that the road to success isn't easy, but together we can overcome any challenge. Please subscribe, rate, and review our podcast to help us grow and reach more aspiring individuals. Visit our website to access additional resources and join our email list. Follow us on social media at REI Freedom for more updates. If you're interested in our acquisition coaching programs, visit reifreedom.com for more information. Let's go.